Did you know that during the height of the US-China trade war, the S&P 500 lost over $1.7 trillion in market value in just a few weeks? Yeah, tariffs aren't just political talking points, they're portfolio wrecking balls. Join me as I dive into the world of tariffs and uncover how they're quietly crushing our investments, and more importantly, what you can do to protect yourself. Tariffs have become front-page news again, especially with talk of Trump 2.0 and renewed trade war threats. Most investors think tariffs only affect a few manufacturing stocks or companies dealing with China. But here's the truth. Tariffs ripple far deeper, triggering market-wide shifts that blindside even the smartest investors. With insights from market analyst commentary from Jim Cramer and data pulled straight from recent world news reports, I'll show you exactly how tariffs impact the stock market and your portfolio. Here's what we'll cover. First, why tariffs spark chaos across entire markets. Secondly, how they change investor behavior. And finally, the #1 strategy to turn tariff-driven volatility into long-term gains. The tariff trap. How uncertainty destroys returns. When tariffs hit, companies don't just pay more, they stop investing, delay hiring, and warn shareholders. That spooks Wall Street. Take any sector reliant on global supply chains, tech, auto, retail. One tariff announcement and boom, stocks nosedive. Remember when Apple lost $75 billion in market cap in just 2 days during the last trade spat? It's not the tariff itself, it's the uncertainty it creates. Markets hate unpredictability. Investors become paralyzed and fear replaces logic. Trump's tariffs already have a massive impact. Will markets repeat 2018? Tariffs don't just hit one company, they trigger a domino effect across sectors. When Trump imposed steel tariffs, construction stocks fell. But guess what rose? Domestic steel producers. That's the secret edge, knowing where the pendulum swings. Tariffs are like earthquakes, destructive, but they reveal fault lines. For savvy investors, that's where the opportunity lies. Tariffs create a risk-off mindset. Suddenly, growth stocks look scary. In the 2019 trade war, investors rushed into dividend-paying giants like Coca-Cola and Procter & Gamble. Safe? Yes. But high returns? Not so much. Playing defense might feel safe, but over time, it could cost you more. Understanding when to pivot is key. And it's not just stocks. Global capital shifts too. Let's talk foreign investment. Tariffs don't just shake domestic markets, they make other countries nervous about us. A Harvard study found that countries in tariff conflicts saw up to a 40% drop in foreign direct investment. That's capital leaving, not just stocks falling. If global investors won't bet on America, why should you blindly keep pouring money into exposed sectors? Awareness is everything. Tariffs can trigger nationalist buying, short-termism, and fear-driven investing. Remember how US consumers started buying made-in-America products in droves after tariffs were introduced? Investors do the same, often abandoning sound strategies for emotional safety. Understanding human behavior under pressure is your edge. The market isn't just numbers, it's people reacting to chaos. Predict that, and you win. Tariffs aren't just taxes, they're psychological time bombs in the market. They drive fear, spark volatility, and quietly erode returns. But if you understand how they work, you can not only protect your investments, but spot hidden opportunities where others see risk. So have tariffs affected your investments? Drop your story in the comments.